Fari, what's going on? How are you?
Hey, did you get those MREs?
Joel is off this week, so but he was telling me, and he is very thankful, very excited to get that. So yes, we did. Thank you very much, there, Fari.
I mean, I'm sorry about the menu, but this is the Navy, and you talk about, where they're good at delivering in the war zone. I said war zone. It's a well Detroit, it's a war zone. So we got to send in the troops. So hopefully they got delivery. I understand they got something a signature. So remember, pens don't write in the middle of a war. So
Well, thank you very much,
no worries.
Fari. We appreciate that. What do you
My pleasure.
think? We're new all-time
No worries.
highs here, Fari, on the overall market. What are you thinking here?
I'm thinking what Brad Sullivan said about a month ago. He says, this is the investors market, buy and go to the golf course.
Go to the golf course.
So,
So are you? So are you?
just buy. The timing was excellent. Couldn't ask for better. But now we're lofty. We're up there. We went from a negative, I'm just guessing here, top of my head, 240, negative 240, negative 250 on the oscillator, up to what was it, day before yesterday, 171 in I don't know, 8-9 sessions. That was a big lift, and so now we got to digest this baby a little bit, and we shall. If Thursday before last, you listened to everybody's crying about another world was coming, you knew that was at least a tradable bottom. And McLaughlin were screaming that. CIs were turning. Now it's more difficult. Now because we can go up there and stay up there, just churn a little bit, because all we have in front of us is a very, very low news laden part of the summer. The only thing here that's crucial is Jackson Hole.
Right.
But you don't exactly get a communique to dissect and change things the way you want. You get lists of a couple of speeches and so on.
And the sentiment is so bullish here right now. Do you think even if they say any, at Jackson Hole, do you think if they say anything bad? I think they'll just probably try to interpret it as good no matter what. Don't you think, Fari?
Well, they're in the box. They've got, even the Fed got themselves in a box here, and so they can't. Look. We've added jobs. The quality of jobs aren't all that good, right? If you look at the paycheck to the purchasing power has not improved much since the actually days before the Great Recession. So I think they'll be very, very extra careful, and nobody wants to mess up. Neither the president or the Fed. I'm sure they're talking, but not in. They're supposed to be separate, but they're not. That's all just good for history books. In practice, a different problem. The other issue is, I think we talked about this a couple of interviews ago. Fed has had a history of first year for a new appointment. Our Fed chair has been always very tumultuous. You saw it in '87 for Alan Greenspan. You saw it. I think he came in at 205, right? No, summer of 205 he came in. Or maybe that was Paulson came in. This is Uncle Ben. Paulson came in 2005. He was recommended to come in at 2006. And next thing you know, from 2007, we were in some form of trouble. And so he was always, for him, was this is Uncle Ben, to kind of catch up on the mess that was handed to him. Given that background, given Dr. Yellen has been around the temple, we call the temple, the Fed building in Washington, long enough, I think they'll be extra careful that we don't have 3-4-3. 3 out of 3, that's just 3 strikes, man. So I think they want to go there. So they'll be very, very cautious on what they say, not to really change the status quo much. Of course, they don't have much choice either, in the sense that the hedge players, the big hedges, they will brutally punish them by just hit the red button, sell. And we have more buyers. We don't have per capita. We're at the lowest participation of mom and pops. I realize that, but still, we are a nation of or a globe of long bias. You have a lot more long bias versus short bias. So at the top, a lot more people are at risk than the bottom. So one minor move, a jerk down, push down, will impact a lot of people real fast.
Well, and when do you think that happens? When do you think we eventually do? Or eventually it is going to happen, but when? Like we've been.
Well, eventually the rates have to slightly adjust. Eventually, I mean, we're going to be done with their what do you call it, whatever you want to call it, opium syringe in our arms by opium, yeah, by December or so. Like this is the game plan. You saw Stanley Fisher, the new vice chair, the fellow who ran Bank of Israel. He came back, and Central Bank of Israel. He came back and said, "Hey, the growth is too modest. We got to be careful." He speaks the truth. He's a very good fellow to follow and understand. And he's not a very transparent Fed governor, unlike some other people I can name, but they shall be nameless and faceless now. One of them very close by to us here in Chicago, not the Chicago Fed, but close, one of the closest banks to Chicago Fed. These guys talk too much politics, not Stanley Fisher. Fisher said, "Hey guys, the rate of growth is not all that good and acceptable. We can do better." So I think, and the fact that we cannot blow the budget. This is the other thing I've been talking about since 2009. I said interest expense can only grow no matter what rate we have because we're expanding the base so big. Obama doubled the debt almost, or we were at 10 billion when he came in, and now we're at 17. So 70% in 6 years. Yeah, it's any uptick will crowd out the corporate legitimate borrowing, the legitimate corporate market, corporate bonds. So that's not good for a growing capitalistic environment. That's just Econ 101.
Okay, so how are you playing this? Are you just staying long here until December when we get off the hopium, or are you now starting to position yourself a little bit differently?
Well, we don't trade that long.
Yeah,
and we don't trade fundamentally. We don't trade fundamentally. We saw in 2008 how bad those fundies were. They were basically taken to the courtyard and some were executed every morning. So we're not going there. What we try to do is we trade what we see, not what we think. And I say that with my pedigree, with my background and education. I say that I threw my Princeton and AGSM books out the window a long time ago. Instead, I bought more monitors. I watch what I am trading and why, and we use algorithms that look for edge, whether it's in price action, whether it's in acceleration area, of the price, whether it is advanced decline, whether it's volume. We're looking for a bias that is rough, kind of it's a gem, but it's in a rough state. Okay, and for example, we bought some IMW put spreads in middle of July because we saw a roll coming, and we held on to them, and a couple of them were back spreads. So as we went down, they even fueled up faster. Well, very, very near the bottom. Not at the bottom. We missed the bottom. I'm not trying to get the bottom. That's not our philosophy. But near the bottom, we just said these things are done. These things are done. We're getting at sigma levels. We're getting at CI levels that should tell us the majority of the juice we've already taken out. Whether you can take final ticks or not, you have to trade that off versus what if I am wrong. And this is the tick I'm looking at now is the bottom tick. That means you can snap back and take away what you made. And depending on what your entry is, and how lucky you got executed, for example, or what strikes you picked. Sometimes there's art, it's not science. Depending how you got in, and where that is, you could have a decent profit, you could have a small profit. Bottom, the analysis is the same though, because you could have a small profit turn into a big loss. You could your small profit get a little bit bigger. You could be trading water. If you look at that matrix, it tells you what to do, what you should be doing. Common sense says, you know what? Go to the bank. Be happy. Go to the bank with what you got. Look for another trade. Well, the next logical trade down there is the upside. So that's what. And what goes up fastest? Either Russell. Remember, we just came in IMW, so hold up. We don't want to say stay in the same name all the time, because these have different volatility cycles and price cycles. So I said, why don't we go with Qs? Qs have higher beta than SPY. We'll just buy a bunch of options on Qs. Same thing also goes in our analysis for futures. Except futures, we don't hold overnight. It's just nature of the beast, and especially on the upside, because you have so much exogenous news. So I would trade the options overnight, several days, or a swing situation with a defined risk. A few times I may very carefully go for a back spread, where I sell the front month or front week, buy the back week in a ratio, and so it's like a booster rocket. It really takes off. Either that way, like a Saturn V, it really goes. Or you just do the put or call spreads, either downside put spread and the upside call spreads. What helps us is a couple of things. We'll look at our proprietary indicators. We'll look for some targets. That's how we pick our strikes. And we always want to be out of the money. In these runs, we want to be slightly out of the money, but we want to sell the other leg somewhere where the Sigma channels are dictating. So that, especially a little bit even lower, so we can overshoot. Why? The parity equation. Remember, the parity equation is the call spread versus put spread. Okay, these two, even though you're even though you're long and price moves, remember for your call spread, there's a put spread thing on the other side. So you do need to get the other side also shrunk, and that part is you have to pick your expiration properly. Because that's because you got to get some sort of count. So I'm going to feel about what my short side is, a short leg. Because otherwise, if you do it too early, it's not that your target was met. You'll see the premium doesn't move up much, and you're sitting there scratching your head. How come I had this, 500 and 550, the stock went to 580? How come I'm not getting the full 50 points? The pricing of the put. The call spread is because of the put side. The put side is not there because it's too early. So you want to pick also your expiration close enough where the put side, if you're right, the other leg that creates a parity equation just sinks, and that you got the ball game. So it gets a little bit tricky to look at different things. The other problem we have on top of all of this is liquidity. Because the size that we trade, it's not big, it's small. We're careful with the number of positions we take. But we have a lot of customers. And we give it to them at $25,000 slice. So for every $25,000 in your risk account money, thou shalt buy, let's say, on this trade, 4 contracts. Well, they add up. So we have to make sure we have liquidity at the strikes we're looking at. In the ETFs, you don't have any problem. You close your eyes and go. Yeah. ETFs are too big. But if you go into something esoteric, let's even some names that it's not really market timing. It's really you have a feel about this name and all that. The biggest problems we get into is liquidity. Well, liquidity on one leg. One leg fires, the other leg doesn't. And remember, if you got a spread coming in, they won't fill you until both legs are bought and sold as a spread to you. So. Each day is different. But it's fun. Hey, it's better. It beats working for a living.
Fari, let's break into a couple of individual stocks here. We have a new all-time high here yesterday in Apple, 101.09. It went down all the way to 99.95, tested the $100 level, passed that test here. Now it's back up here at $100.57. What do you think here on Apple? Are we just going to continue to climb here after we made new all-time highs yesterday, or is there going to be some type of shakeout?
It's going to be, if we go higher, it has to have a catalyst. Products would do that. I'm not sure earnings would, because these are really, really expensive now. Up there, all-time high. The logical part is that you're going to get some latecomers to a party. I have a few friends who are doing that, coming into Apple again now because they spent a better part of last 2 years on the couch in the garage.
Right.
Yeah, they better have said, no. Yeah. What did you do with the 401k? Why all Apple stock at 705? So some of those guys are going to come in now and add now, because down there when we were at 300 and so, this would be related to about not 380, I guess it was. I'm looking at a monthly chart with somewhere in equivalent dollars in like 60 something, 55 to 65 area. Down there, too many people were scared to even touch it. So you get the latecomers coming in now. I think a shake is in order for sure. I'm hearing a lot of 103, 105s. That in itself says some of the players don't see much upside. I'll tell you what. Too big. Market cap. It's the largest stock that's owned out there right now. Let's see. What is our... let me go here and let me go to
Well, it's a big value stock
there.
here, really, because they haven't come out with any new products here in a long time, obviously.
Exactly.
They keep milking the
They're
iPhone.
going to be driven to what they're going to do. You know, their iPhones or ITV hasn't done much. I don't know what that is. Maybe they give us another iteration of that. The iWatch or iTime is next. But here, you got 602 as of last night. $602 billion, $400 million, $500 million stock. Next one is Exxon. That's not a technology stock. The next one after that is Google at 403. So difference between these two is like 200 billion. That's huge. Now, how do you go 5% above that? How do you go 10% above that? Not that easy. It takes a lot to move it. Remember, every tick up and down, those are people are voted with their pocketbook.
Yeah.
It takes a lot to get up there, and then it has to be justified. How do you justify it? Enthusiasm. Where does it come from? Oh, we got new products. So it's back to design, and people like who's I forget the name, the French guy who's sort of the industrial design over there, Isle or something, a good buddy of Steve Jobs, and more importantly, Tim Cook. Believe me, selling in China is not going to give them a lot of money. China is a very tough market. They need to do something different right here. The other problem they have is that, from what I read, is that there could be a ballooning acceptance already of tablets. Okay, unless they do something dramatic on like an iPad 4, this is the issue. I've always said Apple has cycles. If you go back to 25 years history, or 30 years history of Apple, you'll see Apple has got cycles. It's to me, it's a gadget company. It's like Hasbro. They're making toys. It's just they're doing toys for more older children. Okay, they're just making toys for older children. That means you got the cycles. When they say this ecosystem, all that, I don't know. I don't buy that. You want ecosystem? Look at Microsoft. Look at how many parts of software they're in. Yeah, these guys, these guys on two products have done really, really well. iPod and iPhone. iPad is questionable now that things have been. Initially, they did very well, but that was just again gadgets. Okay, so we'll see. We'll see how these things move forward. I think also on the smartphone area, they missed the boat. I mean, have you had an Android? If you had an Android, why do you want to have an iPhone? The screen size, the capabilities, and compatibilities are so huge. I think Google played them really well, just masterfully when the Android came out. Nobody thought, if you read about, as a matter of fact, was it 2 days ago, was the 10th year anniversary of IPO of Google? Did you read? They had a prospectus available. You could take a look. Back then, Gmail was just introduced. Who would have thought what Google did, what they're doing, and how many things they're involved with? Yeah, if I was going to look for ecosystem, I would look at Google and Microsoft, not Apple.
So you think eventually Google becomes more valuable than Apple as an overall market cap?
I know
third
so.
Right now.
I know so. I know so. Yeah.
Fari knows some
You'll see. Mark my words.
Fari,
Reg FD. I know some of those characters. Okay, over there at Google. Reg FD.
Fari's
the
closing
first
words there.
Business partner there, the guy who made all the sales, is a fellow I know really well. So
Fari's closing words. He likes Google better than Apple. Thanks again, Fari. Thanks again for coming on here. We'll look forward to you next week there, Fari.
All right, Chief. Thank you for your time.
Okay. Take care, guys.
Have a good weekend.